Now, taking a look at the non-farm payroll print on Friday the 10th, this is going to be a very important release. Remember that the expectations for a more hawkish Federal Reserve has been gradually moving higher since that very strong non-farm payroll print on the first Friday of February, on February the 3rd. And now we've got a terminal rate of about 5.63%. Now, in the Federal Reserve's thinking, a tight, that is a strong labour market, is inflationary. So if the jobs print comes in above 325,000, and if the average hourly earnings comes in at or above 4.8%, and especially if it comes in above 5%, the Fed will see that as inflationary, signaling more work needs to be done in raising interest rates, and it will raise expectations of a 6% terminal rate for the Federal Reserve. Now, that's in line with sort of the way the market's been moving, but the best opportunity for gold, the dollar and stocks will come from a big miss in the data. So if we saw a miss, headline coming in below 100,000, average hourly earnings coming in 4% or lower, and unemployment at 3.4% or ideally higher, above 3.5%, then we would potentially see a big flush lower in the dollar, and that would be positive for precious metals, negative for the dollar, and positive for stocks. Now, one precious metal to look at is gold. If you just look at it from a seasonal perspective, what we can see is that over the last 25 years and 300 different events, with the US labor markets report, the precious metal gold has a tendency to gain out of the event. So if there is a big miss, we can see there's also a seasonal bias for gold upside. So that would potentially offer a very short-term trading opportunity for gold. We can also see we're around this major support level. We've also got that 1800, 1820 and the 100, 200 exponential average. Now, the major trade risk for something like this, of course, would be if there's another strong jobs report, that's naturally going to support the dollar, support yields, and would weigh on gold. Remember, don't just trade it, but seize an exit.